Hello traders, welcome back to a new update on the euro dollar and pound dollar for the second part of this week. Let's start with the euro dollar. So we're looking at the 4-hour chart, and as we expected, there should be a pullback and retracement after such a strong fall because of the wave 4. Typically there is some type of correction, and that is very important as well. If it is a wave 4, we should see price respect the shallow fib levels and also move quite corrective, choppy. It should be a lengthy correction as well. Those are all typical elements of a wave 4, right? So if we see a close in reverse, and if we see price move up very quickly, then it could also indicate that the bearish price swing is completed, and we might be in a different type of wave pattern, basically, if we see such a impulse to the upside. That sometimes happens. If you see a strong push down, you think that there will be still a lower low, and you would expect, or a higher high, you still expect a follow through. But sometimes the momentum is so strong that it just completes the price swing in one go, and there is no follow through, and basically the price just reverses on a dime. That can sometimes happen. Now, in this particular case, I didn't expect that. I did expect a wave 4, followed by wave 5, and I expected another wave 4, in fact, 3, 4, 5. So I expected 2 more lower lows. That was on Monday, and I still expect the same. That's still the same, because if I look at the current price action, yes, it is moving up, but that's what we expected. But the movement is not very impulsive. It is, I would say, still a shallower angle, obviously, than what we saw certainly in here. But even in here, I think the angle was steeper. And ultimately, although it has some angle to it, it is relatively still corrective in my view. So yes, I think that this particular price movement and behavior does seem to fit what we expect of a wave 4 so far. So far I think this pattern is confirming that wave 4 pattern. Now it's testing the 23.6 fib. If it breaks that, it could go a little bit higher to back to the 120 round level, which typically would act as resistance, and the 38.2 fib is just a little bit below there, so roughly around 120, 119.75. I would expect a bearish bounce to happen if this is a wave 4. And if it is a wave 4, it could go even to the 50 fib. That's not the most usual fib, but it could happen. As long as it stays below the 50 fib, it could be that wave 4. If it breaks above that 50 fib, of course, then things are certainly dramatically changing, and the odds of an upside are becoming better, and this could be a warning sign that our wave 4-5 to the downside is not going to happen, okay, if it breaks above that 50 fib. On the daily chart, basically, just to recap, we're looking for an A, B, C pattern within wave A. Then we had a B, C within red B. So now we're expecting a red C to go back to this bottom. And within the red C, we're looking at basically at a wave 1, 2, 1, 2, 3, 4, 5, 4, 5, basically to finish that wave C. If it breaks through the blue box bottom there, then it might not be a red ABC, but rather a 1, 2, 3. At this moment, that doesn't really matter that much, because in both cases, whether it's a red C or a red 3, we're expecting downside, and we're expecting price to respect these shallow fibs. So for me, confirmations of a bounce could happen on the daily candle. If I see a strong daily candle, bearish daily candlestick pattern, that might be one way, or candlestick pattern here at the 38.2 fib or 50 fib, or basically a push up, but then a time pattern, 5 to 6 candles, not breaking the high. That could indicate a lower high, or a break below the 20 EMA, the first break or the second break, because we might get a break, pullback, and continuation. Second break, of course, obviously better, but sometimes we don't get that second break. Or if there's a triangle, that's also pretty typical for wave 4. You could have an A, B, C, D, E, and then down break. Well, the wave E, of course, is the best typically if that happens, or the break. That would be the third break below the 20 EMA, perhaps. That could be another way of trading that. It could be a break below the fractal, if we get a push lower and then a bounce, there could be a fractal somewhere here. If it breaks through that fractal, that's typically an indication that price will move lower. So those are a couple of ideas. Or if you're a SWAT member, of course, you got access to these SWAT templates and indicators and strategies, and you can use, of course, that for trading this downside. All right, so far it's making what looks like a bear flag pattern, and although I think it will, from my point of view, the path of least resistance would be up and then down at the 38.2 fib. Okay, that's what I'm expecting at this moment. But of course, it might not get to the 38.2 fib, and if it fails to get there, it might do this as well. So I'm looking at both basically a bounce on 1 hour, 4 hour charts, or a breakout on 1 4 hour charts there for break below that bear flag. I guess that's my thoughts at this moment. I really don't have much to add on the euro dollar. Personally, I did think that this was a bullish bounce area because on the 50-minute chart you can see price was testing the 144 EMA from above, so it was a retracement and it was highly likely to be a bouncing spot, either because of a bigger, basically a bigger wave C, or in the worst case even a wave 1, 2, 3. So this looked like a bouncing spot at the bottom of the channel, even though price is in a downtrend. There was a strong momentum. This particular spot this morning was actually on lower time frames a bouncing spot for potential upside to the 38, or at least towards this level. Now we have to see, is there a follow through, or is it going to break through the channel and continue lower like that, break pullback continuation? But sometimes you can see that certain moments, counter trend kind of trading ideas could make sense if there's alignment there in that retracement. All right, pound USD did the same thing as the euro dollar. It just moved up a little bit more, and it's a little bit more impulsive. So this particular movement is looking more like a close in reverse, but not quite. I mean, this part, yes. Now it's slowing down a little bit. It is certainly more impulsive than the euro dollar. That's for sure. So obviously this wave 4 pattern is a little bit less sturdy, right? Because it is in between the 50 61.8 fib of this particular swing. I mean, we could put this, maybe we could put the price swing on this one here, and we'd be right at the 50 fib. Certainly, if it pushes more than that, if it pushes more than 140 and the 50 fib, it might be an indication that something else is going on. For the moment, I would lean still towards this being a correction for more downside, and I think that there's a fair chance that price would make a bounce here, test the bottom, maybe make a triangle as well, or otherwise maybe make an ABC pattern, but eventually break to the downside. If it breaks above this, then I would sit on the sidelines for the moment and review it again at the beginning of next week, because something else might be going on. But for the moment, the ABC pattern with this Red Sea not being finished yet seems to be the most likely at this moment. All right, on the hourly chart, I think we're looking at an ABC completed, and that could be wave A. We might see an ABC down for B, and then a 5-wave up for C, and then down again, something like that. So I would lean towards the bearishness, but that said, it's a little bit tricky spot here because it's really back at support in many ways as well. So I would maybe use, I'm not sure, but maybe even the time patterns here. You've got 4 candles not above this high. In half an hour, that candle's closed. At the end of the London session, if I don't see a break above this high, then this could be easily a lower high, for a push and bounce lower. So that is something that I would wait for. I think now it's a little bit too early. All right, that's my 2 cents. Well, anyhow, if you want to become a SWAT member, of course, feel free to check out the SWAT Simple Wave Analysis and Trading. It explains how to use moving averages, fibs, fractals to understand the price patterns and chart patterns and ended wave patterns, and also how to trade them in a simple manner. or if you prefer, the SWAT ebook for €24.95, or perhaps automated trading systems are more for you. We have Zucier with stellar record so far with 9.5 months of profit in a row on our PAM account, which is a profit sharing approach, or of course rental is also possible. So feel free to check that out. Wish you all great trading in any case, and see you next week. Cheers, bye bye.